It refers to what I teach in my charting course or what I author in my twice-daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Well, good day, everyone. Ira Epstein of Linn Associates with your weekend financial update for this Friday, the 27th of April, 2018. And we're now after 4 p.m., and you can see these are the settlement prices that we're dealing with, which is great. We've got the markets down in the stock indices. We're coming into May 1st, right around the corner. Are the tariffs going to go into place? What's China going to do to retaliate? Or will they retaliate? Will they wait for our trade partners, in other words, Mr. Lighthouser to go, Secretary Mnuchin, and the other characters that are with that, Larry Kudlow, getting everything done, talking to China to see where things are going to go. Then we've got before May 12th or on May 12th, what's the president going to do about Iran? So you have big events. If you watch today his conference with Angela Merkel, the Chancellor of Germany, of course, you did not see the big events that you saw for France. I mean, there's obviously a big difference between the Germans and the French in the president's mind. So he treated her very differently. I didn't say it was rude. I'm sure she had a nice lunch, hopefully a dinner, but it's not a state dinner and all this pomp and circumstance that goes with that, right? I love that. But anyway, where are we? Well, let's just go to the charts and let the charts do the talking. On a monthly area chart, everything's fine, and it's been rosy on a monthly basis since really 2016. You haven't even gotten down to challenge a monthly 18-month moving average of closes. Now, on the weekly area chart, you got a whole different animal here, Jekyll and Hyde. You had a market that for all of basically 2017 stayed over the 18-week moving average, fell at the beginning of the year, tried to get back over it, and has gotten back under it. This goes hand in hand with my thought that the market on January 29th made a top, and we'll have to wait and see, was that the top of this cycle? Everybody has their own opinion. I don't know. That's the right way to say it. What I can tell you is when you look at the chart action here, and this was that big break area, we have traded within that the rest of the year so far. When you try to put together a trend here, you either spike in such a way that you're not putting together to the up or downside consecutive lower highs, lower lows, or higher highs, higher lows. Take a look. You got a higher high, a lower low, and you pulled back within it. Now, what could get the weekly chart bullish, if everything stayed good, was getting over now 2718.5. That could give you higher lows and higher highs. Taking out the low, and I'm assuming this week is all I'm talking about, wouldn't do a darn thing, wouldn't set up a trend. Where's the resistance in the market? For those that take my charting course, you're going to learn that I do believe key moving averages form what's called lines in the sand. They also form an area that markets like to work against as they try to set a trend. The 18-week moving average of closes is clearly what this market fell through, came back, charged around, and now the market is trying its best to stay under it. It's interesting how if you take out that swing line high, you're over that 18-week average as well. When I put Bollinger Bands on, Bollinger Bands give you an idea of theoretical resistance and support when you're in sideways action. You are in sideways action right now. I think you can see it from the top and bottom band. When you have a running market like you did here, they play a different role. They give you a resistance point that the market will often not close over. In fact, 95% of the time it won't close over it. And if you believe the market's going to stay bullish, you're trying to buy as deep away from it as you can, trying to get back to that number. I'm making it simplistic. I talk way more detail in my courses, but that's the idea here. Momentum-wise, this market is flat, and you see that. The day-to-day action makes you crazy on TV. It's up 300, it's down 300, the S&P is up 25, down 40, and you're wondering what's going on. But when you smooth it out onto this weekly basis, you can see you're not doing an awful lot one way or the other. When we get to the NASDAQ weekly chart, you've had a pattern here of higher lows and higher highs. But with this week, you've gone into a stall because I can also argue now that you've got lower highs. And when you have higher lows and lower highs, you're coming in like that. Notice the battleground again, the 18-week average of closes. This was not the way this market was before. Before, if you'd fall to the 18-week, the market was a buy and it was coming back up. But that was 2017, year 2018. In the Dow, at least I have one market I can say is in a downtrend. Yep. If you believe in the theory of lower highs, lower lows is a trend called a downtrend, you have it. You have lower highs, you have lower lows. You fought the battle at the 18-week, you came back up, failed, and now you're dropping again. Just as in the S&P, if you get this market over 24,827, that negates the swing line, but you got to close over the 18-week average of closes. That's going to be the key. Momentum has flattened out, trend down, bias down. In the Russell 2000, where's the battleground? Look at the pattern also, sideways. You're fighting at this 18-week average. Now, this market coming into this week, I could argue, had a pattern of lower highs, higher lows, and that's just what you're doing. You're staying in no man's land. So in a nutshell, nothing going on there. And when I look at the VIX, if the VIX can follow through and get through this 1457 level, I could argue that you'll have lower highs, lower lows. Challenge, the 100-day average is the nearest support. Momentum is still down, and that should mean stocks do better. They flip-flop each other. So one way to look at it. 10-year notes. As I'm looking at it, momentum is still down, bias is down. You did hit an objective. You hit the lower Bollinger Band at 118.27, or did you? Not quite. It looks like it on the chart, right? 118.31. It's close. It didn't quite get there. But that's the support for the market. Bounces in the market are that right now. There's no trend to the upside. The bias is down and momentum is down. In the dollar index, we're seeing a market trying to break out to the upside, but it is running into a key resistance number. 91.79 is the high of this week. The upper Bollinger Band, 91.78.6. Let's round it to 91.79. You hit it, you've stopped at it, but you closed pretty close to it. Momentum up, trend up. You got higher lows, higher highs. That's the resistance, support back at the 90.08 level. The flip-flop in the eurocurrency. You have lower highs, lower lows. Still looks to me like a market that wants to head which way? Lower. You got it. So I'm still seeing a market here very much in the bear camp still. It's coming down. It went this week to 120.97, just missed the lower Bollinger Band of 120.85. Still a downside target. Momentum still pointing down. Aussie dollar into the 100-day average and the lower Bollinger Band. Momentum still down. Lower highs, lower lows. Doesn't take a genius to understand that this market's coming down as the market is petrified. What happens with the trade war and the demand for the goods that Australia and the raw materials that they give China for the world? If the U.S. and China start fighting with each other, if you think it's things as normal, it isn't things as normal in terms of trade. So this has been a market that has felt the pressure. Obviously, if things get resolved, a whole different event takes place. In the Canadian dollar, you've got those steel tariffs looking you in the eyeball. This market is starting to get, it had its rally, things were looking good, and suddenly we're all wondering, where are we? I can tell you that the Canadian minister to the NAFTA convention is going on, not the meeting that is going on, as well as Mexico next week. They flew out today. They'll both going back for more talks next week. The real crisis there, if they can't get something done soon for Mexico, this whole deal falls apart, because the odds are, if the polls are right and you get a leftist president in there, in Mexico I'm talking, he may not want to do these deals. Be careful. You know, you've got to get things done to get them done. And timing's everything. If you look at the yen, you have fallen back down. Now, what's going on? Well, in Japan, they have committed again, they said it all week long, to doing one thing. Easy monetary policy. So easy, they're taking away their projection as to when they can think a 2% inflation rate will come. They don't want to disappoint the market. So I'm looking at a market bias down. It did go and stop against that 100-day average of closes in green. Momentum is down. We'll see what the market can do with that. Bitcoin, tax selling ended. We were talking about that. You've gone back up. Now, if you look at this chart, if next week you start losing this momentum and the red line closes under 80, and this is a daily chart still, I'd be careful. You could get back to that 18-day average to regroup. On the Brent versus WTI crude, the spread's widening, and why not? Think about it. What if the U.S. breaks away from the Iranian treaty, slaps sanctions on Iran? Oil output out of Iran will fall again. As it falls again, the Brent goes up. On the other hand, the U.S. added 5 more rigs. Their numbers came out of Baker Hughes today. 5 more. We're going to highs we haven't seen in a long time. I think we're running like 160 units more than we were a year ago, rigs. I mean, the numbers are we're a major exporter, getting ready to surpass at current numbers Russia, the biggest of all the oil producers. So we're a powerhouse in this. And with that, the differential is we have so much that just slowly but surely you're seeing the Brent gain on the U.S., and here's the U.S. You can see what's going on. We're down 28 for the week. They're up 68. There's $1 between the two right there. Doesn't mean we won't see good export business, but we keep producing more so our prices don't have to fly up with that. And in the nat gas, as a chartist, all I can see is a neutral market. It got back to the 18-week average, sort of stuck, trying to figure out what to do. Now, during the week, I'm able to do things that I don't do on the weekend. The whole idea here is to give you a longer-term view of the market, and you can read everything that I do and watch these videos on a number of your different applications. We make them available, by the way. So in my phone, I always watch my videos as I'm going back home, and I can see each one that I've done, what I want to say, how I want to work it. Then what I also do is I write. Monday through Thursday, I put out updates. One at about 11:30 in the morning each of those days, that's Central Daylight Time, reviewing and giving you an idea as to, number one, what's happened so far in terms of fundamentals or market reports, then my trade ideas that I might have in writing. I back it up with an oral recording. Then I back that up because what I want to get you going, if you're looking for the trade recommendations, is in the morning. Besides all that, I want you to see another video. And it's not available on YouTube or anything from there. Some people also just want my commentary. And we had enough call for that they said, Ira, it's all great, but I want the commentary. What can you make that available for? So instead of $70 a month, it's actually every 30 days, it's $20. And you can buy it a year up front, $240. I think you'll find it well worth your time and effort on there for what you're doing. And as I said, that's just the commentary at the reduced price. How do you get it all? Give us a call. Try a free trial if you haven't had it. Otherwise, you can always go to the website. Under the word research, it's there. That's our website address. You can click up here if you're watching me on YouTube or on other websites. Underneath us says click here for Ira's free information. I'm Ira Epstein. You all have a great weekend. I will see you.